Oh, I've just got a notice to say this meeting's being recorded. Hope that's okay with everyone. It is being recorded, but we were just to let everybody know that the question and answer session won't be. But the first part where where Rajiv gives us his talk will be. Thank you to everybody who's joined. We're very happy to see so many of you here from different organisations, different sectors, and we are delighted to welcome Rajiv Prabhakar to our first CHASM seminar since the change of leadership in April, when Stuart and I took on the directorship and deputy directorship. So this is also my first experience of doing one of these online, because I've been away for quite some time. So it's great to see, as I say, so many of you here. Oh, just one point, one formality. If people could just stay on mute just through the first part of the seminar, that would help us, just so in case there's any feedback or any background noise. I'm sure that many of you will know that Rajiv is Senior Lecturer in Personal Finance at the OU. And Rajiv is the epitome really of a CHASM associate. He's carried out extensive research and published widely on all matters related to personal finance, including inheritance tax, wealth tax, pension savings, child trust fund, as well as critical analyses of asset-based welfare more generally and the assets agenda. Some of his latest publications include Universal Basic Income and COVID-19, the Child Trust Fund and COVID-19, and of course, his new book, Financial Inclusion, Critique and Alternatives, which he'll be talking to us about today. He's also, for 2021-22, Parliamentary Academic Fellow at the House of Commons Library on Financial Inclusion. And Rajiv teaches in this area too, leading on the You and Your Money module at the OU. The format of today's seminar is fairly standard, with the addition of Karen Rowlandson playing the part of discussant. So Rajiv will talk for up to half an hour. Karen will then spend sort of 5 minutes reflecting on some of the key themes from Rajiv's presentation, and giving the opportunity really to prompt the discussion. We'll hand back to Rajiv, who might want to respond to some of those points that Karen raises, and then it'll be over to the audience for wider questions. So if that's all okay with you, Rajiv, I will hand over.
Yeah, brilliant. Thanks, Louise, for a very generous and kind introduction. Thank you all for coming to today's seminar. I realise it's probably the first sunny day it's been for a while, and I'm glad you managed to pop in here rather than sit outside, or maybe sit outside with your laptops. Also, thanks to those of you who've been to this. I did a previous version of this at the Open University, but what I will try to do is try to skew it in a different way, because I'm going to be talking about my book, Financial Inclusion, Critique and Alternatives. But what I'm going to be talking about here today, as well as giving you the general context of the book, is the way in which actually work done at the University of Birmingham, and specifically CHASM, has kind of been a key influence both on the kind of the framework, the context for my understanding of these issues, and also towards the end I'm going to flag the ways in which research done by a whole variety of researchers at CHASM and University of Birmingham is relevant to thinking about alternatives, and to shape my understanding of how to progress this. And so the book in a way is the start of a dialogue, and here I'd just like to acknowledge during the presentation, and what I'm going to try to do is flag the ways in which Birmingham and the University of Birmingham has directly influenced and contributes to my own thinking on the subject. Okay. This is the book, which was published in January by a Policy Press. Just to give you a broad kind of overview of the main thrust of the argument, the book was born kind of out of frustration in a way, that there was a big gap between the way supporters and critics of financial inclusion treated this concept. And by financial inclusion broadly, it's the understanding is the ways in which individuals or citizens are connected to the financial system. And by financial system, what that means in practice is savings, banking, insurance, and credit, and so on. And one thing that I was struck by is that there's a big gap in between, supporters, which primarily includes, although not exclusively, the kind of policy sector, people who actually work on the ground in this area, could see trying to encourage involvement and reduce barriers to exclusion as a way of reducing a poverty premium of vulnerable groups who are excluded from the financial system. And there's been excellent work done by, for example, Louise Overton, Karen Rawlinson, Jodie Gardner, for example, on things like payday lending and the ways in which if people cannot get access to mainstream lending, they're forced to go to kind of payday lenders and so on. And that's kind of one direct cost that is imposed, and reducing the kind of barriers within which vulnerable groups can access these services is a way in which we can directly improve equality. Now, there's been quite a lot of policy work done on this, and there's people in the audience who know much, much more on this than I do. And there's been excellent work done in credit unions and so on. But what I was also struck by was that alongside this and in parallel to this, there's a kind of very critical academic literature that has raised questions about the whole idea of is it a good thing that we're encouraging individuals to take part in the financial system? Because there's a concern that, well, this is part of a kind of neoliberal free market agenda. We're kind of throwing people from collective security provided by the welfare state, and we're encouraging people to fend for themselves in financial markets on their own. And in doing so, we're shifting responsibility and risks being absorbed in a kind of collective way, and we're just delegating it to the individual. So, for example, if you've got a state pension, that's a collectively funded and provided, we're provided security from poverty and retirement. On the other hand, if you're saying to people, right, instead of that, we want you to say if you're on pension, private pension and defined contribution pensions, then you're much more at the whim of, well, financial institutions, stock markets and so on. And in doing so, there's a great risk shift. And what I wanted was to kind of try in this book to bring these literatures together and to say, look, there's useful insights from both supporters and critics, and they really need to talk to one another. Now, there are exceptions to the field, and a lot of the people who are attending here actually are part of that exception. So we've got people like Karen and Louise who contribute to both the policy literature and the academic literature. But by and large, my claim in the book is that this tends to be the exception rather than the rule. And there's been quite an academic debate about this. Now, I talked about the relevance of CHASM and Birmingham. Well, here's one thing that they've directly done, and they've had a direct impact on how A, the debate in the UK is framed, and B, my understanding of it. So a key thing is, well, can we have measures of financial inclusion? And here, over the period of, maybe you'll have to correct me if I'm wrong, maybe at least around a decade-ish, the University of Birmingham have been producing these financial inclusion monitoring reports, which are a key source of information. And they give the different dimensions by which citizens are excluded in some ways from the financial system. Now, this is a really important source of information. And this is a direct contribution to an understanding of a kind of literature that emerged within, say, the late 90s in a field such as geography, where there is much more attention to the idea of people being excluded from the financial system. And what CHASM has done, and it's one of the few reliable sources of information we have on this. There are other bodies now. Financial Conduct Authority have a financial life survey, biennial survey, which is run in 2017 and 2019. But nevertheless, in terms of a consistent level of engagement and provision of information on this policy area, I think the University of Birmingham leaders. So here are some of the snapshots from the most recent report, and obviously Karen and Stephen Kay have been leading on this, and others. So we can look at the idea that about 40 million or 20% of the UK population live in poverty. And so we have kind of what in the jargon we call this a vulnerability context of poverty, the idea that people are living in a precarious situation where something mundane like a washing machine breaking down can plunge people into debt. And picking up on the point about lending, if they can't get access to mainstream financial services, mainstream lending, high rates of interest and so on. About 1 million of adults don't have a bank account, which today, roughly, although the picture has improved over time, and if you look at the financial inclusion monitoring reports, it'll chart how that's changed. And the picture's slightly better if we look. The picture's better if we look at individuals who live within households with access to a bank account. I think it's about 500,000 people, and so on, who don't have access to a bank account. I can't remember the exact, but the idea is there's a population of the unbanked. And why is that a problem? Well, for example, which has been noted that for quite a long time, fuel poverty, the idea that if you can't have a direct debit, you haven't got a bank account, you can't get a direct debit. You can't get a direct debit, you can't get cheaper fuel deals and so on, which contributes to fuel poverty. Again, and then in terms of the context of past year and a bit, we've had COVID-19. And here we're looking at income drops, and what the monitoring reports do is chart, about 30%, 28% of percentage of adults face drops in income due to COVID-19, and these are often concentrated in particular sectors of the population. And so we're talking about younger people, minority and ethnic groups, self-employed actually. And then this drop in income leads to people struggling with paying bills and debts. Now, so this is kind of giving you, I mean, a lot of this no doubt will be familiar, but I just wanted to flag the kind of crucial work that CHASM has been playing in this area. And it's directly involved my interest. It directly prompted my interest in this area. Okay. Now, where do I come in terms of the book? So the title is Financial Inclusion, Critique and Alternatives. And it's useful in a way to kind of split it up into the 3 different bits of the title: financial inclusion, the critique and the alternatives. And this will lead into the way in which, as well as mapping the context of my understanding, research done at Birmingham actually is informing the way I think about the alternatives. And I'll come back to that right at the end. But again, I'm sure most of you are familiar with this, and we're just kind of going over stuff you already know. But a common definition of inclusion is the idea of the access that people have to services. Now, some work by the Financial Inclusion Commission, which was a non-party independent policy commission, which actually I think Karen was quite involved in, and others, is the idea that it's been, financial inclusion is like being connected to the mains, like the electricity grid. And this idea of infrastructure, I'll touch upon a little bit on the end. Now, there's been some debate within the academic literature that's kind of fleshed out this broad understanding of access, and it looks at the kind of resources that individuals bring to bear to the financial system. The idea that middle class, for example, middle class groups have access to networks, they know how to deal with bodies, they have money, and so on. And that kind of helps them navigate their access to the financial system. So here we are in having a kind of richer sense of what it means by financial inclusion. And so the first part of the book looks at these kind of definitions of financial inclusion, and I touch upon some of the kind of broader debates, which leads on to critiques. Now, again, I've kind of foreshadowed this in my introductory remarks. And what I do is I kind of split it into a kind of pro case, positive case, where there's much more focus on the details of policy and the ways in which specific policies can reduce this poverty premium of excluded groups. So including improving access as a direct benefit in reducing poverty. Now, the theoretical literature, which emerges in a whole, there's a huge literature now on financialization. And broadly speaking, it's an idea that it charts the different ways in which financial markets play in everyday life. Now, there's different strands to this. There's some of it that looks at kind of what we call regimes of accumulation as a kind of a macro level, the ways in which, as an economic system, the ways in which the finance system is dominant over, allegedly dominant over other types of economic system, other parts of the economy. There's another strand that looks at the shareholder model of the firm, the idea that firms aren't, the purpose of a firm is to maximize profits for shareholders. But the kind of third strand is this everyday life of finance. And here is the kind of terrain that I'm looking at. Now, critics will say, look, problem with encouraging people to take part in financial inclusion, in financial system, is that, look, it just undermines essentially the welfare state, and it undermines an obvious alternative to the welfare, alternative to financial markets, which is kind of collective funding and provision of services. So why should we care about automatic enrollment of pensions? Why don't we just improve the state pension and have higher taxes? And so there's some skepticism about and I cover this in the nature of this critique in this book. And what I do is I look at different case studies, which picks up on things that work I've been doing on, say, savings, on asset-based welfare, the Child Trust Fund, automatic enrollment. And here I've been influenced by a range of people, for example, James Gregory's work, Karen's work on assets. I've also been influenced by that kind of, I think they've been doing some recent work on different types of savings policies. And again, that's kind of shaped my thinking on this. And so I kind of explore this and on housing. So if that kind of sets up the problem, as it were, this lack of dialogue and this critique, and the argument I make in the book is that we need much more interflow debate if we're going to progress forward. What should we do now? Now, I kind of foregrounded, I'm just going to talk for another 5 or 6 more minutes now. I foregrounded the way in which CHASM and the University of Birmingham has influenced my thinking on these subjects. So how does CHASM and the University of Birmingham now influence the way I think about it now. Given that I have, my view is that it's important to have these debates. So my starting point, and towards the end of the book, I start discussing this, that look, making financial decisions is part of everyday life, whatever financial system we live in. So rather than rejecting financial inclusion entirely, it's important to think about different versions of inclusion. Now, if we think about the kind of metaphor of the electricity mains, electricity courses through the mains, which seems like an obvious point. Within the financial system, broadly speaking, money plays, if we're going to continue with this kind of metaphor, courses through the financial system. So how do we deal with or think about alternative models? And here we can think about, there's been recent debates about a universal basic income, for example. So if we spool back and remember that during COVID-19, for example, 28% of adults have experienced a drop in income. To what extent should we use the idea of a guaranteed income payment to all individuals as a mark of citizenship, regardless of whether or not they use it to find work? To what extent could that tie into it? Because, and this also ties into other debates about topics covered in the book, such as financial capability, because one, we talked to the idea that financial capability roughly is the idea that people have the knowledge, skills, and confidence to make financial decisions. Now, one view is that, well, actually, many people on the margins actually have got quite good they're quite financially savvy because they have to be to get to live by day. The problem isn't the lack of skills, it's a lack of money. And which is like an obvious solution to poverty is giving people more money. And so that's kind of one kind of debate that I look at. Also, an idea, because sometimes the universal basic income, and I look at, there's been another kind of vogue, which is kind of universal basic services, which is the idea that, right, okay, if we take the financial system, the welfare state, the idea of services being free at the point of delivery, and the kind of exemplar of that is the NHS. Can we think of an enriched model? And within that model, that still might have an important role for the financial system of banking. So for example, if we decide that we want to give everyone a basic income, it has to be presumably paid into a bank account. And a network of accounts is one way in which financial inclusion can be absorbed within kind of broader collective structures. So this is the idea that we can think creatively about how we think about to respond, say, to COVID-19 and so on. And that's where I end the book. And I just want to, in the final couple of remarks, I just want to talk a little bit about the way in which Birmingham research now is informing my own thinking. So for example, the idea of alternatives. So one of the topics covered in the book, for example, is on housing. So I'll look at kind of social housing models, the way in which, you know, a particular type of model of housing led to kind of credit booms. And here, work done by, say, James Gregory on housing and different models of housing, different ownership structures important. If we take credit, we're looking at people like Karen Rollinson, Louise Overton, and Jodie Gardner, the kind of their work on credit. More broadly, there's other interesting work, related work, I think, and Kaylee Gaithway on food banks and Lee Gregory on time banking, which are kind of all in the same kind of ballpark. And what I'm interested now is, and what I find instructive, is the way in which this different work is directly engaging with the sort of questions and directly engaging with this idea of we can create a better alternative. And I guess that's probably the best point to stop at. That's my email. Please do feel free to email, and it's bang on 1 o'clock. So I'm going to stop sharing. Thank you,
Rajiv. That was brilliant. Thank you for such an engaging discussion and just a wonderfully rounded and informative overview of financial inclusion. I think the way that you sort of described that and put that, highlighting the key issues, was excellent. Thank you also, I should say, and by the way, we didn't bribe Rajiv in any way to say any of these things, but thank you also for such a generous appraisal of CHASM's work and CHASM's involvement in this area. You've, as it happens, you've given us, I think, lots of interesting things to think about for our strategy day next week. We happen to be having a strategy day, and some of the things you've talked about there are going to be really interesting for us to think about and reflect on. As I said before, I'm going to hand over to Karen Rawlinson now, who will reflect on some of the key themes. Maybe post some questions that you can respond to, Rajiv, and then we'll be over to the audience for questions. So, Karen.
Yeah, thanks, Louise, and thanks hugely, Rajiv. As Louise said, we didn't prompt. I didn't know he was going to talk more about our work than his own work, but it's typical of Rajiv, who I've known for many years. He's incredibly generous in so many ways. So yeah, here's the book in person, and it's an absolute cracker. Do take advantage of the 20% discount. It's well worth it. Highly recommended. I only have one regret, that I didn't write it myself, because I've always wanted to write a book on financial inclusion, but Rajiv's done it now, so there's no point. No, it's a great read, and really informative and thoughtful. So I just want to say a few words and then open up to conversation, because there's lots of really great people in the audience, and get to hear your views and questions and so on. I think the book is really an important contribution, but not just to debates about financial inclusion, but actually this broader point that Rajiv makes about how policy debates, on the one hand, tend to focus on the kind of smaller, perhaps, issues of reform, and how do we take the current system we have and make it better. And then on the other hand, you get the academic debates, which often take a much broader kind of structural analysis of the economic and financial systems, and perhaps don't come up with policy recommendations. That's not what they're trying to do, but they're very much critiquing our current systems, and perhaps suggesting we need, quite radical change of those systems. And this is a kind of, I suppose, a bit of a polarization, a bit of a simplification, but I think it's a really important point. How do we, or can we, is it helpful to bring those together and look at how we can make more significant changes and understand from each other? And Rajiv doesn't really say that one is kind of the better way to do things. He's just saying that there are these discussions going on. How can we bring them together? And I think it's as I say, a really important point, not just in relation to financial inclusion. So the work has a even greater significance. And another point to say about Rajiv is that he doesn't just write about this kind of stuff, he absolutely does it. So I've seen him in action. The Financial Inclusion Commission, I think we were both giving evidence to that commission at the same time, and Rajiv, I was kind of focusing on the minutiae of policy change, and Rajiv was just absolutely, expanding the horizons of that commission and saying, you've got to look at this broader issue, the context, what's going on in terms of the structures of our economy and our finances. And I thought it was a revelation. Well, it was just great to get that perspective in there, which doesn't get the attention it deserves. And similarly with the House of Lords Select Committee on Financial Inclusion, his evidence again tries to expand the horizons of policymakers, and I think I've learned a huge amount about that from him, and try and draw that into my own work. And I'd actually be interested in his reflections after this, if a bit more about his parliamentary role that he has. So you can maybe tell us a bit more about that, Rajiv. So just on a couple of points, just to bring out from the book and then open it up. But Rajiv mentioned in the presentation about his discussion of financial capability, and I think it's a great example of how there are very different views about financial capability, from the sort of policy debate saying we need to increase people's education and knowledge of the financial services system so that they can engage better. And then on the other hand, very critical approaches to that, saying, no, it's not about financial capability. It's again about the structures. It's about lack of income, lack of opportunities, and we need to tackle those. And Rajiv kind of again brings these together brilliantly and says, no, we do need to think about issues of financial education and capability, but we need to think about the content of that education. So helping people understand the broader systems and structures as well as the structural barriers they face, and also the individual choices they have on a day-to-day basis. It's all helpful given where we are now and where we might want to be more broadly going forward. So I think he really kind of learns from the different literatures and tries to think practically, what can we do to try to really make things better for people in so many different ways. And then just finally, I mean, obviously Rajiv didn't say so much about his other work on asset-based welfare and savings. He's a real expert on that side of financial inclusion. And again, I've learned a lot from his discussions of citizenship in relation to asset-based welfare and savings, which he also applies more broadly in the book to thinking about financial inclusion and financial capability, actually. So these broader concepts of citizenship are really important. We might come back to that a bit more too. I know James Gregory also have written about this, who's in the audience. But I suppose there's one other area that I think is would be good to expand on, if perhaps also asking people in the audience. I know we've got people from credit unions in the audience, but thinking about issues of borrowing, because I think that really goes to the heart of some of the debates about financial inclusion. What do we do at the moment? We know we've got a very large number of people who are in debt perhaps with their mortgages or with their unsecured loans, perhaps to high cost lenders. How do we tackle that? How do we bring these different perspectives from the policy debates and the academic debates to bear on this? How do we kind of move forward, and both in terms of regulating lenders perhaps, but also supporting people, affordable credit, so credit unions and other approaches. And the government has been doing quite a bit on that in the last year or two, but obviously it's been a bit sidetracked by other things that have been going on. But how do we move that forward? How do we really support people to avoid getting into that kind of debt in relation to credit, but also give people access to borrowing at affordable rates where that is helpful to them? So I'll kind of leave it there, and that's something perhaps the audience can pick up as well as Rajiv in his comments. But as I say, it's an absolute pleasure to have Rajiv talk to us today about his book. It's a really important contribution to the debate, but also this broader point about how we get policymakers to engage not just with academics who can talk to them about policy and the minutiae, but also these broader issues and theories that academics can bring. And I think that's a real contribution, a major contribution to what we need to do going forward. So thank you, Rajiv, and look forward to the discussion more generally.
Wow, thanks, Karen, for being so kind. Just a couple of points. I'll talk a little bit about debt. I'll pick up a little bit about debt. Just a couple of things, because I'm keen also to open up actually reflections. I mean, part of the book argues that it's important that academics listen to people who've got the kind of knowledge and lived experience, and given these people in the audience who will know much more about this than I do. I'm also aware that the work that you've been doing, Karen and Louise and the Garden have been doing on debt, you'll know a lot more than me. But actually, on this point, what do we do about debt? And this kind of, in some ways, it kind of replays some of the themes in the book, in the sense that one thing is that you could say, well, how about the issue is kind of, we should look at debt advice, which focuses on the individual, the idea that individuals need to be told or need to acquire skills in how to manage debts. And it gets an additional level of complexity because you've got the link between debts and assets. To what extent should you save rather than pay off debts? Is it more rational? which then opens up another flank, if you like, on discussions of asset-based welfare. To what extent to which you should see asset-based welfare as part of debt. And actually borrowing in some ways plays part of the part of the critique of the whole part of the financialization agenda, the kind of abstract theoretical argument is that the problem in places like the UK and Anglo-American economies was that there was too much borrowing going on, and basically because governments wanted use house price inflation as a kind of way to boost the economy. They encouraged loads of secured lending, which then wound people up into debts they couldn't manage, and then it all burst, and then it all kind of collapsed, and that people were encouraged to be, in the jargon, investor subjects and so on. But I think, so that's one side of it. I think the regulation, is the critical side, because on here, I think the work that you've been doing, you, Karen, Louise, and Jodie, have been doing on kind of regulation is really critical. But then the other point, quickly, is on, you could say, well, people need money as well, which is, it's all very well saying, right, we need behavioural nudges for the debt, we need regulation and so on. But maybe the simple answer is people need more income. And how do we cope in a world within which, for the past year, people have just seen drops of income, they've been furloughed, what should we do now? And this is where the kind of creative solutions can come along, the kind of basic income and so on. This is where the kind of work that's been done here at Birmingham on, say, time banking and so on. I'll probably stop there because, as I say, I want to maximise time for other people to give their insights.
Thanks, Rajiv. Okay, Carl.